Good morning, traders, and a happy Monday out there to everyone. Hope that you all had a nice weekend there in store and are all ready for this nice week that we'll have coming up in front of us here. And just before we go diving into our charts here, see what we have lining up for the session. Just a few items looking over on the economic calendar there for today. Relatively light in terms of the board for the U.S. Side of the equation. They do have a few Fed speakers listed out there today. Looks like they're having some conference there, so that's pretty much the bulk of the items of interest there on the U.S. side of the spectrum. And then outside of that, just to be aware of on the Europe side of things, right, we do have supposedly Whit Monday, I guess, so a bit of a holiday in France, in Germany there, and Canada. So just to take into account on the Europe side of the spectrum there, a couple bank holidays. But with that said, it's going to give us pretty clean slate here to come in and grab our daily chart for starters, at least on the S&Ps. We know that we did close on Friday as 3-bar balance mode whilst still being on an extended run to the upside, meaning our consecutive closes on one side of the daily 5 SMA. We had our set of 3, your 6, 7, 8, 9, and then 10, 11, 12 on that close there on Friday. So not too bad there by any means. The daily 5 SMA here currently comes in at 53.16, which we are still doing a fine job on maintaining. Coupled with the fact that, as we well know, last week as well, we were able to get the full test up on the daily charts. So there is the element that we're still trading, around that point to some degree. That's the 53.33 half there, basis these S&P. So we know that we traded above it quite a bit there last week. We tested above it and then haven't really closed necessarily above it, but we have been trading around that zone quite a notch there as far as our daily chart of the S&Ps go. So want to keep in mind there that we do have 3-bar balance mode, so we can get some, better range expansion, so allowing us to keep a little bit more of an open mind. But of course, as far as the daily charts go in and of themselves, the 33 half mark, of course, is going to be quite important. And then just bearing in mind, 5 SMA down below, and then our upper Keltner channel up above, just speaking solely off of the daily charts in themselves. All right, coming into our intraday display of data, such as the hourly chart, we can also see pretty well defined, right? No major damage done. We had to come back, do a little more of a complex correction too, fill in some of our advancement from our better trend day up when we were making the new highs, the new all-time highs, right? So we came down, we did a pretty fine job on filling in some of the structural work from when we had been in one time framing mode on the hourly charts. So that's all perfectly fine. And now when we're in this region here, of course our more intermediate points, the 53.49, of which of course would be the full retest up from the high that we put in on Thursday of last week, and more of the caution zone would come in on the other side of 53.05 if we were even to get down there, because we'd have that daily 5 SMA coming in just in front of that. But I do think these hourly charts should serve quite well. We can see the nature in which our slow line here on the oscillator had corrected itself all the way back down below zero, and essentially we went through a positive consolidation phase. It'll be a little more pertinent if you go out on something like a 120-minute visual, the nature in which we corrected some of that momentum without giving up too much ground. So that's where we're coming into the session here with the S&Ps. Daily 5 SMA, extended run to the upside, doing a okay job of holding the 53.33 half, but once again we'll have to see how we want to trade around that point there in the day session, right, our pit session visual. So for now, pretty reasonable though, just trading slightly above that high that we put in from Friday's trading. All right, and then moving on along here, we have the DAX next in the queue. And we can recall in the case of the DAX, it as well had been on the persistency of trend or extended run to the upside. And we did have our first close below on Thursday, right? And we left a nice tail on Friday, and we started to reintegrate ourselves back inside the following day's range there. Did not quite get back above the 5 SMA immediately, and it doesn't have to necessarily be on the day following that first close below. So we did leave a nice tail. We came back up, and at the time it was nice because we also had some intraday structure, right? So we had the signal on the daily chart, but we also had that nice rhythm, or call the hourly divergence, that we were left with there on Friday. We did come up off the low pretty well, just not quite enough to get towards that daily 5 SMA. So that's going to be one of our more important metrics here for the case of the DAX, and that's coming in at 18,866 basis that daily 5 SMA off the daily chart. So maintaining their own for now. I do think the hourly chart should serve well there for the DAX. We're also coming in and doing some work from when we had the long liquidation flush or range expansion below that daily 5 SMA. We're coming back in and filling in some of the work that we had put in there on the downside. So for now, we're slightly just testing at and around that daily 5 SMA. So we'll want to see as well how they want to go and treat that there during the day session. And it's also nice because it gives us a little indication as what we could form, when our S&Ps ultimately get their first close below, which we have not quite gotten as of yet. So we'll see how that pans out there for that DAX. Then we can move on along here. We have our currency group here. Next in the mix, our euro currency, which also serves fairly well. We'll start to see some of these hourly charts becoming of interest here for some of these select groups. So with the euro currency, we had our nice advancement as well, Thursday, and then as we'll see with the gold and the bonds, just on the tail end of last week after we had our nice expansion bar. Subtle differences in the mix. We know we had the bonds work themselves back down a notch better, but here with something like the euro currency, right, we traded above the previous day's high slightly. In the overnight session, we have our previous day's low, which comes in at 1.08495. Right, in terms of the euro currency, since we have been, working on a healthy, swing to the upside, and we have been holding a good portion of our initial impulse bar, meaning that we haven't given back too much ground from that as of yet. The bottom of that bar comes in at 1.08285. So impulse bar, 2 days consolidation, high to low, came up off of the low. So starting to rotate there just a notch, but coming in over here with the hourly charts, we can see the nature in which we had put in some movement. Some of this hourly structure is already correcting itself from the overnight. So we had the nice impulse up, our 2-part wave. So it's already unfolding to some degree, but that's where that previous day's low, and kind of like if you want to view it as the inside pocket here, would be of good interest there in terms of what we have here for this of the euro currency, right? So rolling back down just beneath 1.086 should be a little area of interest for them there. So we'll keep that in mind if we jump out just one time frame higher here to a 120-minute view and just scale it out just to a small degree, just so we can really highlight some of this mild channeling activity that we've had. We know that we were at least able to fill in all of the damage that was done when we had the initial impulse to the downside. So we've been able to get that out of the way, but a little bit more of a broader range here between this 90.95 and the 84.95, giving this euro currency plenty of room to come in here and consolidate, right? So a bit of that A, B, C down rhythm. We've pushed back up, but so far we've failed to make any type of higher high or a new high there in the case of that euro currency. All right, so that's the EC there. And then we have the gold, which, as we well know, had quite the advancement going for itself overnight. And here with the gold, per usual, right, we start here with the daily view. Right, you have your set of 3, your 1, 2, 3, 4, 5, 6. On Friday, we had day 7. So we started the extended run to the upside in the gold. Of course, we did have a nice advancement, so we can say that they've made their full test up, but that had unfolded overnight, so that was above the 2448.8. So we're going through a bit of a consolidation phase, right? We're reintegrating ourselves back inside the previous day's range. What we are not near is the daily 5 SMA. Comes in at 23.95 in the case of the gold. So if we close above that today, it's a ways down there, but if we close above it, we'd still be on that extended run to the upside. And then dissecting it in a little more further detail, if we come down to the hourlies or the 120-minute time frame, right on the high test, right, we had just showcase a little hint of sell divergence or loss of momentum. So we're working ourselves back down. We've come back beneath the high from Friday of 2427.4. So between 2427.4 in terms of reference points and 2402.7, that was the high that we broke out from there last week. Those will be our points of interest there for that of the GC. You see it a little more pertinent on the 120-minute visual when we came in and finally we're able to get ourselves above the high, but certainly an instance where we have a case of the higher highs and higher cycle lows, hence the extended run on the daily charts and starting to form some better channeling action on the hourlies or the 120-minute charts. So that's where we're leaving off there in the case of the gold. It's again slightly beneath that previous day's high, somewhere essentially where we closed there on Friday, but between the 27.4 and the 2402. Those will be our kind of initial regions there with that of the gold. Okay, and then we have that of the crude here. The crude has been in a tad more of that bracketing market phase where our upper and lower ends of the ranges have been met with a bit of that fading activity. Just in other words, we know bigger picture. We've completed the ABC wave structure on the crude, and we came up and we did do a fairly reasonable job of trading to the daily EMA. We are coming off the back of 3 days though of low to high, low to high, low to high in the crude. So we've used up a good amount of movement there, trading back up if you would. So in the crude, likewise with some of these other groups, we did have some activity unfolding overnight. So just enough for them to come in and fill out the rest of this zone here. We had this going up to 79.72 in the crude. If we blow this up nice and large, just to refresh us as to what that looked like when we were coming down at the time, right? We pushed back up into the zone once and then twice. Didn't really do a full job on filling that out. So during the Globex session overnight, we did a better job on getting on the other side of 79.72. So that was able to get out of the way. However, what we're starting to do as well, which we kind of saw starting to form on that market profile visual as well, we're starting to put in a bit of a volume note here with that of the crude. Just the amount of time that we're spending down here, right, and putting in some good price bar overlap. So kind of that sideways line feeling, if you would, drawing through the bodies of the bars in terms of the daily chart of the crude. So 79.72, essentially looking at that as being the upper end of the range. And then if we were just to take the core, right, of our price action, where we've had a bulk of the trading taking place, it's just kind of a rough guideline here, just looking at the bodies of all these bars, right around 78.55, a little bit above, below it, kind of where our bigger congestion zone is there with the crude. So just kind of viewing this as being like a bit of the center of gravity from where we've been trading on both sides of, right? So as we tried the upper side of the range out after having 3 days of low to high already, we can work ourselves back, come back, see if we want to check out the middle of the day's range. 78.78 would be the daily 5 SMA, so which should tie in pretty close with that being a bit of a volume node there on the 240-minute display. So that's where we're coming off there with that of the crude. And then lastly here we have the bonds being fairly interesting as well. The nature in which we've gone through this consolidation phase, right? We had our nice markup coming out of our range there at the tail end of last week, and then we spent Thursday and Friday playing inside of our impulse bar. Right, so we worked ourselves down. We'll tie this in with the 120-minute display because it's nice to see it on the oscillator rhythm. The initial push down giving us that ABC type of rhythm or wave structure, so filling in most of their original impulse bar that we had to the upside. And what's kind of neat here in these bonds is that we were doing some work beneath the 117.07, which is all right. This oscillator, right, we've already seen it's trying to hook itself up back to zero there. We essentially went sideways as opposed to lifting all too much. So just kind of bearing in mind any further retracement, we remember at the time, right, looking above this 116.05 took quite some time, right? We got our look above it, and then we spent a lot of price bar overlap around that zone. So whilst we're retracing here on the bonds, any deeper, you have a 116.18 and then 116.05 as being kind of essentially holding points there with these bonds, our little initial supportive zones, whilst they're working themselves down in this bit of a B, C down, and then coming in and taking out that low. So not the most, constructive there with the bonds. We're, giving back a good amount of the progress that we had made there last week, but we'll really want to see how they want to, try and hold, if at all, inside of this region. So like incorporating those 120-minute charts there with that of the bonds, and then just to, for good measures, right, just for the sake of similarity, in the case of the 10-year notes, right, a similar case with the oscillator condition, right, our nice impulse down, brief consolidation, and then our next low. So as well, bit of that ABC type of wave structure, and starting to come back inside, just as just a rough guideline, right, doesn't have to be exact, just back inside this previous congestion zone, whether you're looking at the 120-minute display or the daily visual here with the amount of bar overlap that we had inside of that zone. So not too dissimilar there for those 10s and those 30 years. And with that said, I'm going to grab our daily chart of the S&Ps, get that one loaded back up for us. And then we had our nice hourly view here. Let everything else get settled in, run its courses here. And we're going to be all set here for our nice Monday in front of us, right? Plenty of items to take into account, right? I think overall 60-minute charts and these 120-minute visuals should serve quite well, for our purposes there today. And then we'll leave this DAX on the top left. Once again, DAX holding, maintaining itself above the daily 5 SMA. After closing beneath it on Thursday, we spent another day beneath it on Friday, so in today's case we're getting some brief better testing and acceptance on the other side of that, and we'll see how they want to handle themselves, right? We'll have plenty of time seeing how that Europe session, or Europe morning session handles themselves, and speaking of which, always good as well to take into account for not just our S&Ps, but for our other groups, what type of activity we had unfolding overnight, okay? We had a gap up opening, so Asia, traded mildly low to high, but mostly rotational, right? And then Europe session, we kind of came down mildly and then proceeded to push back up. So in other words, no real major, as far as the S&Ps go, no major back-to-back trendiness overnight that we would be concerning ourselves with as we had last week, right? When we had the back-to-back, up Asia, up Europe, oftentimes gives us room to pause, rotate, or have some counter-reactive movement into the U.S. morning. But in today's case, we had rotation overnight, so it gives us a clean slate to work with there as we get ourselves closer towards that opening. So we'll dial some things back, get a couple charts adjusted, and be on our merry way here for this Monday to kick off the week.